We're back with part two here to talk about retiree insurance, the basics of some things we need to know. We spent part one talking about healthcare, a lot to digest in that one. So this one, we're going to talk about long-term care and life insurance. Just again, some basics we need to know because we have to play the game within the system that we have created here in our society. So there's no point trying to avoid it, even if it's a little boring. So stay tuned and check this out. Hopefully you'll pick up a good couple of nuggets or two. Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist, Phil Putney. Now let's get rolling with today's show. Hey everybody, welcome into the podcast. It's Phil's Tax Hacks and Other Retirement Facts with Phil Putney and myself, here to talk investing, finance, retirement, and insurance. Boring snooze fest, I know, but we got to deal with it because it just is what it is. So,
part of life,
my friend?
Part of life.
Part of life, yeah.
Doing good.
Yeah. Hey, so you got the new book going ready, right? Yeah.
Yeah. So it was released on Amazon this week, pre-released for the Kindle version. So we're kind of pushing it out there. It'll be officially released on the 15th. So you can download the Kindle version at that point and start to get the paper copy. And then we'll have the website up here shortly. So yeah, it's been good. And we already hit Amazon #1 on financial services, personal tax, and retirement planning. So
nice, very cool.
It's already taken off. So yeah, very excited.
Well, we'll put a link.
Work in progress for years. So
oh yeah, I know, right? Well, we'll put a link to that in the show notes for this week. So we'll put that Amazon link in there. But we also will have some, kind of a commercial call to action coming up in the upcoming shows here in the next week or two, talking about that. What's the name of the book?
It is the Tax Smart Retiree.
Nice. All right. Very good. So be on the lookout for that. We'll put that again in the show notes, folks. If I can say that 3 times.
That's a tongue twister.
That's right. And then we'll definitely have some more information coming on that as well once it goes from pre-release status into full dealio. Yeah. So very cool, very cool. Well, let's get into our conversation, Phil, and let's pick up where we were chatting. We talked about health insurance last week. Again, just a ton of stuff to deal with and digest. Certainly important to talk with, qualified professionals like yourself and Brandon, especially when dealing with the Medicare side of things. But let's turn our attention now to long-term care and life insurance for this portion. What's the reality of the situation on long-term care, Phil? I mean, let's just kind of get right to the heart of it. We're living longer. It's expensive as hell out there. Everything is through the flipping roof, right?
Yeah.
So what's the reality?
Yeah, well, I mean, the reality is there's going to be, I think it's a recent study said 2/3 of women who reach 65 are expected to need long-term care as they age, right? And nearly half of men, so that's one of those statistics that you look back and think, there's no way, right? Because you're kind of looking back at maybe your family history, and long-term care wasn't as prevalent back then, I think for a couple of reasons. Number one, we weren't living as long, right? We are living longer, like it or not. I mean, that's always that discussion with clients of, what life expectancy will be. And it's like, I don't know if I want to live that long, right? Because
I'm that way.
If you've seen people as they age, it's, quality of life is really what it comes down to. And I think that's part of why you're starting to see more and more need for long-term care, or it becoming more kind of front and center, is that quality of life side, right? Because I mean, there's a couple of options you have as you get to there. You're either relying on family, which is historically a lot of what's been done, which maybe that's still your plan, but that is a big I don't want to say drag on the family, but it's a big burden. Let's say
it is
to be shared if there's kids, if they do share it. So, but anyways, that's the reality, is we're more likely to need it because we're living longer, and we're all busy.
Yeah. Well, let's get into that part of it. So the why behind it, you just mentioned the burden, right? My mom's 82. She's getting ready to go on 83. She, every couple of weeks we'll be going to the chiropractor or something, and she'll be like, I'm only going to get worse, right? And I don't want to be a burden on you guys. And, she feels the need to say that like once a month. And, it's
one of those weighs on her because she's like, I don't want to be a burden. you
Right.
know?
But I mean,
But
it's expensive. And so we tend to try
yeah,
to, it's like, I can't even afford this. Like, I was looking at trying to put her in another place where they can do some more things for her. And she doesn't even anywhere near needing that yet. But I'm just kind of preemptively thinking because she's in pretty good shape. So I'm thinking, there's a good chance she's going to see 90, and what if I have to put her in a place where she needs help? And it's like six, seven, eight, $9,000 a month. I mean, how do people afford this? It's insane.
yeah, it is. It's can be very expensive, obviously, depending on the level of care that you need. So, I mean, that's the first thing I would always recommend. Just look at it, right? Look at the options, look at the cost. Don't go into this blindly thinking, oh, it's not going to happen to me. Number one, what if? And that's always the question I kind of approach with clients. So, what if it happens? What does that look like? Where are you going to, get this money from? Is this something you're thinking the kids are going to help? And if that's your plan, that's great. Have that discussion with them though up front so that they know and you can all plan accordingly and make some decisions around that to be better prepared once that happens. I mean, I'm working with a client right now that unfortunately in her case, her mom doesn't have long-term care and she's now in a scenario where she needs full-time care. They haven't, the mom doesn't have the resources to pay for it. The kids haven't wanted to pay for it. So the three of them are basically taking turns living with mom to make it full-time care, which I mean, that becomes a big burden. And not to mention now we've got one of those kids that they've got health issues themselves. So now they can't help, so now it falls back to the other two. So I mean, that's just the reality of what happens and what does that look like for you. It's have
That
that
gets
discussion
depressing.
up front. Yeah. I mean, it's not a fun topic to have, but
No,
or
no, and it gets
discussion to have,
depressing. Yeah.
but
Well,
better
what
have
is
it
long
now
term?
than
Yeah,
when it happens. So
yeah. Well, what does long term care insurance typically cover, Phil?
depends on what you want it to cover. I mean, there's like any insurances, there's different levels of coverage, right? So you can get confinement, meaning it's only going to pay for coverage in like a nursing home, basically, right? So I mean, it's you have confined care. So I mean, that's a nursing home type of coverage. That kind of coverage is going to be less expensive because the typical stay in nursing home is going to be relatively short. I would say under 18 months. So, I mean, it's usually kind of you go through progressions of care where you might need some assistance at home. Maybe you get to the point where it's a little bit more than that. Maybe like an assisted living type facility is more what you would need. And then ultimately, you're going to need, true custodial type care. But I mean, that's usually a short period of time. So that's why that kind of coverage, if you choose it, is less expensive, but it's very narrow in what it covers. If you want it to cover assisted living, home care, well, now it becomes more costly because there's a broader range of services they're going to start to cover. So that's what it really comes down to is what do you want it to cover? I mean, you can cover many different things, many different services. And then the next thing is how much do you want it to cover? How long? Because usually how the policies are designed is around a certain dollar amount, so X amount per day for a certain number of years, and then you have to think of it kind of like a pool of money you have to spend from. That dollar amount per day is the maximum amount you can get out of the policy per day to cover whatever those services are.
Right. And I mentioned it that people feel like it is too expensive, right? That's usually the biggest, like, I just can't even deal with it. So how do you shape that conversation? Like if somebody's walking in the door and you're starting to build the conversation, the strategy, putting things together, and they're like, hey, I don't even go there because I can't afford it or whatever. I mean, how do you work around that? How do you start to kind of get people to at least open up to, those chats?
I mean, and that's the first fact is just having the discussion to see, can you afford it, right? I mean, it's not worth, to me at least, not living retirement to try to plan for long-term care because maybe it won't happen to you. And we just went through the statistics. I mean, 50% of men aren't going to need it. A third of women might not need it. So, I mean, you might be in one of those that you wouldn't need it. So, I mean, if you truly can't afford it, you would have to cut back retirement dramatically to help do this. Then have that discussion with the kids though, so that they understand, hey, this is what I'm thinking. I really can't afford to not have coverage or to have coverage. So there could be a time that I'm going to need you to help.
Can you run the math?
Oh yeah, you can run the math out to see what it looks like. And that's what we always do. So when we're running a financial plan, we run it as though you're going to live to full life expectancy with whatever that is and not need care, right? So that's kind of the general plan. Let's see if that works. If that works, that's our target. Let's make that work first. But then we want to stress test the plan, so to speak. And this is one of the stress tests to say, okay, well, what happens if each of you or one of you needs long-term care? What does that do? So it's worth running the math to see. And if that's in your scenario where, hey, I really can't afford it, it just doesn't fit, um, or I'm not willing to make that change in lifestyle to try to afford it, well, then maybe you're going to end up in that path of Medicaid, right? Where you spend down all the assets, and now the state and federal government through the Medicaid program will end up covering care.
If you go that route, though, you are at their disposal, right? I mean, so, and correct me if I'm wrong here,
So
Phil, on this, but like they can tell you where they're going to put you facility wise. It may not be the closest to your home. That happened to my
absolutely.
mother-in-law. Yeah.
Yes, I mean there's a lot of hoops to get there. Number one, you've got to spend basically everything, right? You can have a house, a car, and I think it's $2,000 in liquid type assets. I mean, so it's not much, right? You're down to bare bones. And then you qualify for Medicaid, and now you've got to get into a Medicaid approved facility, and that's not all facilities have Medicaid or have Medicaid beds, or they've got a limited number of them. So,
And let's be honest, they're not usually the top of the top.
no, they're
Right.
not, because the Medicaid, frankly, doesn't pay what they're going to get as a quote unquote private pay. And that's the other discussion that you have to start, because there's a lot of people that says, oh, I'm going to protect my assets. I want you to go to the kids. I'll have Medicaid pay for me. Do you really want that? Is that really the kind of care you want? If you want the options, then that's where having some kind of long-term care insurance plays into it. And when you're looking at long-term care insurance, there's a lot of ways to approach that coverage.
All right. Well, let me ask you a final one on this, and then we'll jump to life insurance. Alternatives to traditional long-term care insurance, not just the we'll take care of each other alternative either. Is there some other alternatives?
The alternative is rather than have the long-term care insurance, maybe have accounts that you kind of designate, so to speak, and set aside that is they're earmarked for long-term care. So, I mean, if you do have enough financial resources, so the quote unquote need for long-term care, it's not going to cause a devastating effect to a surviving spouse. And a lot of times that's the concern when we're working with clients is what happens if the husband needs care first and they use a lot of the assets. Where does that leave the wife, or vice versa, whatever it is, that first spouse to need care? Do they consume a lot of the assets with care? So now our surviving spouse doesn't have enough for their care. So I mean, if that's not your scenario, you have enough resources, then it's a matter of, okay, let's earmark some money on the side for long-term care. But I mean, the discussion we always have with clients, even if you don't technically quote unquote need it, is would it make more sense maybe to use some kind of long-term care to cover it? Therefore, you're kind of freeing up the assets.
Gotcha.
Because
Okay.
at the end of the day, maybe you don't need it, right? So you're having this bucket of money over here that's earmarked for long-term care and you never need it. So I mean, it's a discussion to have. You gotta run the math, and see. And there's types of long-term care today, what we call asset-based long-term care, where it's not just the premium you pay forever, kind of like your home or auto, and may never need it. That's one of the downsides to more traditional long-term care. I pay forever and never need it, and I've lost all the premium. Well, there's these asset-based care at the core are life insurance. So you're going to name a beneficiary that ultimately can get some, if not all of those premiums back as the death benefit. So there are options. Don't just look at it and say, yeah, I'm not going to do it.
Yeah. Well, which is what a lot of people do, is because it's just so fearful too that we just go, hell with it. I'm not going to mess with it. Right. Don't do that. At least start having these conversations so that you don't put yourself even further behind should something, happen. Because again, we're all living longer. So 50% is still a pretty high number for us guys.
Discussion to have,
so tough discussion, but you got to have it. All right. So let's talk about life insurance real quick. I know we can probably keep this one a little bit quicker. But just if you're retired, the big question always comes up, Phil, do you need life insurance if you're a retiree? We've been told forever and a day that we typically don't. What do you think?
You got to run the math to see. I mean, the reality, kind of like long-term care, is for life insurance, you have to look at what happens if something happens to either spouse today. And that's, again, we talked about our plan. So we run a plan, again, as though everything works out just like we planned at full life expectancies. No need for long-term care. Everything's great. Make that plan work. Now we want to stress test it. We talked about long-term care. Now we're stress testing it from a life insurance plan. How we stress test that is say, okay, what happens if either of you passed away today, 5, 10, 15 years into the plan? What does that look like? And sometimes there is a need for life insurance. Why would that be? Is number one, there's going to be a loss of income. When one spouse passes, at a minimum, we're losing the lowest Social Security benefit out of the two. So there is going to be a loss of income to that surviving spouse. Secondly, is the surviving spouse is now single versus married. So all the tax brackets just got condensed. They're much smaller. The percentages are the same, but what goes into those percentages are smaller. So this is where we run into what we call the widow's penalty, where that surviving spouse with less income typically is going to get pushed into a higher bracket just because of the math and how that plays out. So you've got to run the math. There's no easy answer around it to say, it's not like when you're working and say, well, yeah, you need 5 times your earnings or whatever it is, right? There's no simple formula. There's no shortcut to just running the math to say, if it happens today, what does that look like? If it happens, and we do it in increments because typically as you get further into the plan, if there is a need, it's going to get smaller.
I was going to say, because if you do determine that it's the right fit for the client, then the next question obviously is how much, right? So then, or even what type, right? Term versus whole, right, or universal, or.
And that's where you get into having a strategy around it. And that's why we run it that way. And we build what we call the life insurance ladder that shows us, well, we need $1 million today and, $750 and then 500 and or whatever it is for their scenario. And depending on what the scenario is, if it falls off relatively quickly, maybe just term is going to work. We can ladder a couple of term policies together.
Gotcha.
If it's going to be a longer term need for life insurance, then we might have to start looking at more of a permanent type policy, the universal type policies, where they're designed to provide coverage longer term. So
yeah.
So again, it like anything, have a plan first, run the math, figure out what is it that I need, then come back and look at the products that might fit to make that plan work.
Well, at the end of the day, folks, it is not the sexiest conversation to have, but it's one of those things in life that we have to have. Just like car insurance, just like home insurance, flood insurance, fire insurance, it all sucks. But we have to have it. We have to deal with it because it just is the reality. Right? It's how we've structured our world, and it just is what it is. So do yourself the favor and have the conversations, not only with your loved one, but also with your financial professional. And if you need some help, reach out to Phil and talk with him and Brandon and the team there at philstaxhacks.com. That's philstaxhacks.com. And don't forget to check the show notes. We'll put in there the link for the Kindle, the Amazon thing for Phil's new book. So very, very cool. So go check that out as well and subscribe to us on Apple or Spotify or YouTube. And we'll be back next week with another episode right here on Phil's Tax Hacks and Other Retirement Facts. Phil, thanks for hanging out, buddy.
Sure.
We'll see you next time.
Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.